Good afternoon to everyone. We're so excited for you to be joining us today for our 15th Growth Hour webinar from Shed Advisor. This one is about cleaning up your financial mess. My name is Rebecca, and I will be your moderator for today. If you have any comments or questions throughout the webinar, please feel free to drop them in the chat box at any time. We'll have a Q&A section for the webinar at the end. So for those of you on the phone, you can just unmute and ask us directly at that time. But if you have any questions that pop up in the meantime, feel free to go ahead and leave those. Sometimes we will address those like as we go through the webinar, and other times we'll leave them for the end. But either way, we'll be getting to the questions, and it'll be great. So now let me introduce our host for today. Steve Byler is a certified speaker and coach with Maxwell Leadership and a certified EOS implementer who assists in leadership and leaders and leadership teams in getting clear with their vision in order to get more of what they really want from their business. Welcome, Steve.
Thank you, Rebecca. Delighted to be here with you again today, and special privilege to welcome Titus Kuepfer from rather far from the Eastern time zone. You're probably about ready to go to bed, Titus. Uh, you're in the south of India currently, and hopefully enjoying some warm sunshine when the sun is up at least. So, Titus, glad to have you here. The
Great to be with you.
Growth Hour webinar exists to serve owners, leaders, executives. We're focused on the shed industry, but any business that you're in to help you be a smart, healthy executive. Because we believe smart, healthy executives deliver. Smart, good at what you do, staying on top of the task, staying on top of the skill set that you're involved in, and then healthy in that you have open, honest relationships with your leadership teams and are able to lead from a place of sustainability. So today we're focused on a bit of smart and a bit of health. Smart about financials, and then healthy because it takes clear financials for you to lead and build a healthy company. And where you don't have clarity around financials, there's often a lot of human anxiety that shows up, which absorbs an enormous amount of energy. So you're wasting energy in places of anxiety rather than having the kind of clarity that can help you really build a successful company that gives you health as well. So Titus comes to us from Prosynergy Bookkeeping. In 2018, he emptied his savings account to start Eden Lawn Care. Then, after growing the company for 6 years, he sold half of it, moved to India to help start Prosynergy Bookkeeping. Prosynergy has been growing rapidly, now includes 12 team members in 2 locations. Titus is passionate about entrepreneurship for the higher purpose of reducing suffering and restoring human flourishing. Again, Titus, delighted to have you here today.
Great to be with you.
So tell us a little bit about, from the lawn care business to India to bookkeeping services and this passion to really confront human suffering and nurture human flourishing. Tell us a little bit about how that's burning and how that's working for you currently.
Yeah, so India has been on my heart for, maybe 12, 13 years now. And even when I had the lawn care company, I would travel to India over the winter and the off season, and serve here, explore, get to know the culture. And it always had been my dream to move here. And that dream became a reality when I convinced my older brother, Tim, to move his family as well. And so it was August of 2023 when we first started Prosynergy in Virginia. We incorporated there and then moved to India a couple months later to pioneer operations there in India. And so, yeah, India is obviously a developing country, has the world's largest population. There's a lot of great skilled professionals just ready to get to work, but because of the economy it is a fast growing economy, but it's not as strong as in the developed parts of the world. Many of these people are left with like a master's degree and not having any great path to pursue as far as a career. And so kind of what we wanted to do, and it's in our name, is create that synergy between companies in the West, specifically in North America, who are struggling to find the help they need, professionals they need, or struggling with capacity, and this surplus of skilled labor here in India, and create synergy between the two economies. And obviously, it's not a new idea. Outsourcing has been around for a while. But specifically from our cultural background, from the Anabaptist world, it's not something that you hear of a lot. But there's just such a huge need in the Anabaptist world, especially among business owners, for services like bookkeeping. And so that's kind of what gave us this idea. Hey, we can connect these professionals in India, many of who already have experience in US accounting, to serve this target market in the US. And so, yeah, our higher purpose, we talk about this all the time. Our vision statement or mission statement is create value to reduce suffering and restore human flourishing. So there's kind of three parts there. Creating value is what we do for our clients. Talking about messy books, 90% of our customers, I would say, come to us with just a complete disaster in their QuickBooks file. And so our goal is to create value, to offer something that gives financial clarity for those business owners. And then with our profits, obviously, we're not just concerned about where our profits go. We're also seeking to have an amazing workplace environment for our employees where they can grow professionally. But also with our profits, we're funding different community development initiatives here in India, like sewing centers, where we teach ladies from underprivileged communities how to sew, where they can sew for their families or even sew garments that they can sell or get a job somewhere. We have computer centers where we teach computer skills. Really, the only way to get a decent job in India is to get a computer job. Most of the manual labor jobs just don't pay well. And then also literacy centers, tuition centers, because the government schools are pretty atrocious. So if we can offer after-school tuition for kids from underprivileged communities, that's something we've been doing as well. So yeah, entrepreneurship, I love it. It is in my blood, but ultimately, like, it's the higher purpose that makes it worth it for me. It's seeing people find opportunities, people who are often overlooked, and seeing our employees flourish and be excited about their job and advance professionally. That's what makes it worth it for me.
Excellent. So in working with companies, we often talk about kind of the three major functions of almost every business. And those three major functions are, one of them is getting the work. So we call it sales and marketing traditionally. Then another one is operational. It's kind of doing whatever you do. That's the service or the product that you provide. The third major function is this financial admin aspect of business. And that's what we want to talk about specifically today, not so much sales and marketing or the operational, but the financial side. And most people don't start businesses because they love doing bookkeeping. They start a business because they love doing the thing, whatever the thing is. And as they start doing the thing, the IRS actually requires them to submit records once a year of what they did, how much money they took in, how much money they sent out, and how much of that is taxable, right? And so if you start a business, bookkeeping's not really an optional sort of thing. But for many businesses, especially small startups, and even, let's be honest, Titus, even some larger businesses, it's just kind of the mess that lives off in the corner. And the owner, often the founder, kind of does it on the weekends and the evenings, tries to kind of stay on top of it. But they get to the end of the year and they have to file their taxes. They discover, many small business owners discover they just have complete chaos. And, this is the most dreaded time of the year. And I hear stories of shoe boxes coming out with stashes of invoices, and we're trying to sort through shoe boxes. Most people nowadays, their shoe box is in a QuickBooks file somewhere, but it looks a bit like a shoe box.
Still a shoebox.
It's still just stuff has been thrown in there, and it's meaningless to the business operator often, or they may think it's meaningful, but it's not been reported accurately, so they're living a bit of under illusion, which is why we titled this webinar, Cleaning Up Your Financial Mess. So talk to us a little bit about the kind of mess you see when you're onboarding new clients, when people come to you in the pain of bookkeeping and say, Prosynergy, can you help us? And I want to add something here. When I have people come to me interested in coaching, I often hear this in our conversations. Well, let me try to fix this and find a good person here and do this and do that. Then maybe I'll be ready to get coaching. I say, well, that's a bit like you have a housekeeper who's coming in to clean your house, but you decide you're going to vacuum the carpets and clean the shower and take out all the trash. For wait, that's what you're actually paying this other person to do. So you guys don't just do bookkeeping, but you do the maid services of cleanup as well, right?
Yeah, definitely. Yeah, I want to get to that, but to comment on what you were saying about, these small, especially in the service industry, companies that start up, and these three parts of the company, which is sales and marketing, operations, and finance. Operations, like you said, is why they wanted to start their company. They're great at doing something. And interestingly, in the service industry, sales and marketing isn't always extremely necessary. Often, clients just come rolling in the States.
Referrals, yeah.
Um, but you're right, this finance side is something that the business owner maybe does evenings, weekends, maybe their spouse does it, and it just becomes this thing and there's this thing that happens in your brain when there's something you don't enjoy doing and you kind of procrastinate it. Even if it doesn't take that long to do it, it's just always in the back of your brain, just kind of dragging you down. And I feel like that's what a lot of people are experiencing. So yeah, to the cleanups piece, yeah, definitely when we get new clients, many times they tell us, hey, we think our books are mostly fine. There's probably some issues there. So what we always do is we start with a comprehensive audit where we go over both the balance sheet and the P&L, chart of accounts, everything, and find and report all of the errors. And like I said at the beginning, like 90% of the clients just have a complete disaster. Even those often with an in-house bookkeeper. Many times they have an in-house, maybe part-time or even full-time bookkeeper who is pretty good at, manning the front desk, pretty good at data entry, but just doesn't understand accounting. And to no fault of their own, this is the only business books they've seen, and they're kind of learning as they go in the same way they have to learn how to be a secretary and whatever else is just kind of thrown on their plate.
Yep.
So once again, not trying to fault them, I'm just saying it's not their expertise, especially when a company is growing and becoming more complicated. So yeah, like I said, we always do an audit, report those errors. One of the most common mistakes we find, and probably the most significant, and if anyone from my team is watching this, they're gonna kind of groan a little because I talk about this so often. But it's my pet issue, and it's deposits posted directly to income accounts. And the way this happens is if you create invoices in QuickBooks Online, when you get paid for that invoice, you have got to record a payment on that invoice to close it out. And then when the deposit comes into your bank, you need to match that payment to the deposit. What often ends up happening is they'll create an invoice. Maybe they'll receive payment on that invoice, and they'll either post the payment to an account on your balance sheet called undeposited funds, or they'll post it directly to the checking account. Then when the money comes into their bank, they're like, well, this is services. So they just categorize it as services, posting it right to the P&L. What happens is that invoice posts to the P&L and the deposit posts to the P&L, and they're double reporting the income. So what happens is, like I said, if the payment is undeposited funds just keep stacking up in their balance sheet. Or if it went to their checking account, they might even reconcile the account and just leave it in there as an uncleared transaction. Many times we've seen people not even report a payment on the invoice, so it just stays on their accounts receivable. And they're like, yeah, I know my accounts receivable isn't quite accurate, but I know who owes me. Like, why does it matter? Or like, balance sheet, what is a balance sheet? And that undeposited funds
Yeah,
account,
I would guess that's a
no
big one.
idea.
That's a big one. Yeah.
Yeah, no idea what that is there. And so what ends up happening is you can over-report your income by tens of thousands of dollars. And then you're paying, $5,000, $10,000 of taxes that you just would not have had to pay. You think your company's doing better than it actually is. And so that's just one example of an issue that we find all the time. And man, I think QuickBooks should have something on the tin that says, warning, do not do this. Because, I mean, a lot of the mistakes that happen in QuickBooks are not that consequential, but this one definitely is. You're paying way more in taxes than you would need to if you're doing this.
Yeah. So that's one of the places where you see kind of the mess show up.
Right,
And is it fair to say, Titus, that most business owners pay careful attention to the P&L, whatever they think the activities of their business are, but their balance sheets actually are not accurate or are not
right.
maintained for debt, balances of accounts, receivables, payables, inventories, all those things that really are balance sheet or impact the balance sheet and don't really understand how the balance sheet works in relationship to P&L.
Yeah, that's definitely the case. I mean, whenever we get a new client, I go straight to the balance sheet, and you can just glance over it, and the horror level rises as you scan down through it. Which I get it. Like the P&L is the interesting one, and the P&L is super important. It tells you how much money you're making if it's accurate. But the balance sheet is where these major mistakes can kind of camp out, and we see that happen all the time. And I understand why. Like many times, a business owner hardly even knows what a balance sheet is, and like you said, doesn't understand the difference between a P&L and balance sheet.
Right. And just my simple explanation is P&L is has a begin date and an end date, tracks the income and expenses between those two dates and shows whether or not you've made money or lost money. So it's has a
Right.
begin date, end date, and you can do it for a year, you can do it for a quarter, you can do it for a week, whatever time period you want. A balance sheet is just simply a snapshot of financial position at any given point in time.
Right.
So it's
Yeah.
this is our
And
statement of
and
financial position.
right. And we use fancy words like assets and liabilities. Really, it's what you own and what you owe, and then what's left over. If you
Yeah,
would liquidate the company right now, so assets are what you own, liabilities is what you owe, equity is what's left over. That's what your
yeah.
balance sheet shows you.
So talk to me a little bit more about um, the tools. So you guys run almost all of your clients through use QuickBooks Online,
Right.
and people have this love-hate relationship with QuickBooks. Some love it, some hate it, and there are other alternatives. And I'm not suggesting you make actually a sales pitch for QuickBooks Online because when I went from a desktop, we had a server-based, QuickBooks Enterprise. Um, I loathed QuickBooks Online,
Yeah.
but eventually it just kind of wins out because
Right.
why does it win out, and why is it worth considering something like that?
Yeah. Well, it is pretty common for people who switch from desktop to online to really struggle with the transition. I tend to think it's just because anytime you're learning a new interface, there's going to be some hiccups. But at least, in previous years, there were features that QuickBooks Online did not have, like their inventory features were not as robust and things like that. Um, yeah, like you're saying, I'm not going to make a sales pitch for QuickBooks. For better for worse, they have the corner on the market. So we function from QuickBooks just because that's what everyone uses. There are other alternatives like Zero or Zoho Books or Wave, and they probably work fine. It's just everyone is kind of on QuickBooks, and it's sort of the Walmart, I guess, of accounting softwares. What you definitely need to do is have a great accounting software. I would say an online accounting software. That way, anyone on your team can use it. At least for our purposes, I mean, it makes our job a lot easier if it's online. So some of the great features QuickBooks Online does have is a receipts capture tool. So
Yeah,
there's really no reason, like you're saying, to store receipts in a shoebox. There's no reason to store physical copies of receipts, period. You can simply snap a photo of an expense transaction when it takes place with the QuickBooks Online app. It'll sync right over to QuickBooks. And then when that transaction comes through the bank feed, you can attach it so that every expense in QuickBooks has a receipt attached to it, which is really important in the case of an audit. In case you ever want to dig through your records, you have all the documentation right there. So that's one great feature. If you have vendor bills, you can do the same thing. And when you get it on your laptop and it comes through, it syncs in. You can create bill payments right there from QuickBooks. It's tracked in your accounts payable. Another great feature is the bank feed. So you can connect your bank account and credit card accounts directly to QuickBooks, and every transaction will get automatically imported. Now, this is where dangerous things can happen if you don't know what you're doing. That's where the double reporting to income accounts can happen, or even double reporting expenses if you've created it from the app and then it comes to the bank feed and you don't match it properly. But really, if you're reconciling your account, that's the source of truth. If at the end of every month you're reconciling all of your accounts and your balance sheet accounts are correct, then the tech isn't going to make anything inaccurate.
Yeah. So the tools are really important for this. I mean, you can do it on Excel spreadsheet. You can do it on a paper ledger book. All those things have been done for many, many years, and they work. I started in my coaching practice. I started on some Excel sheets, very quickly went to QuickBooks Online, and the number one reason was receipt capture. So I'm traveling, and I have dinner, buy gas for my rental car. I just developed a habit. I immediately take the photo of the receipt and upload it to QuickBooks, and then I know it's done. And I know that I've got my receipt in a place where it can actually be tagged, tied in, and resolved. And I don't have to carry packs of receipts with me and then try to remember a couple times a month to, do something with them. And so the app, especially when you're on the road, the app makes QuickBooks Online a very easy tool. And the other reason we ended up sticking with QuickBooks, even in a larger company, for many years, was you can hire talent to run QuickBooks quite easily because it is so popular. So many people get training in QuickBooks, have worked in QuickBooks, that it's much easier to find with less onboarding training required than some of the more maybe obscure, accounting systems for small businesses. So suppose we have a financial mess, and honestly, end of year, beginning of year is usually where people start kind of feeling the angst about the mess we have in our financials. Or maybe they don't even know they have a mess, but they do. What does cleanup look like? So when you approach, say you get a new client and you go to clean it up, what kind of process do you go through? And suppose we've got somebody here, on the call or watching this YouTube video that says, I want to clean up my books so that they are actually accurate and guide me in good decision making. Where do you start?
Yeah. Yeah. So like I said, our audit is pretty comprehensive, and essentially we've created this checklist for how errors happen, and we know exactly where to go to find them. So we get the audit, we get the report of errors, and then it's important to know when taxes were last filed. So, if 2024 taxes were filed, great. Some people haven't filed for a couple of years, but we want to tie the balance sheet to that last tax return. It needs to match the tax return if it doesn't already. Now, if there are some glaring issues in previous years, like maybe they overreported income by 30,000 or they underreported expense or whatever, and that happens to come up in the process, then we will suggest they amend their tax returns because they could get a great refund for that. But that's kind of the first step. And then reconciliation is really the gold standard for how to get books accurate. So we figure out, have the books been reconciled? If so, we just start then. Often we'll have 6 months to a year of reconciling, which is simply the process of making sure your QuickBooks matches the bank and credit card statements. So we go down through the balance sheet, reconcile all the bank accounts to date, reconcile all the credit cards, reconcile all the loan accounts, and then we will send a accounts receivable report to the business owner and just be like, hey, print this out, use a Sharpie, mark off any invoices that aren't valid. And so there might be an invoice that's paid. If they reported that already, you might need to mark it as bad debt or figure out what's going on. And same with accounts payable. Sometimes there'll be bills in accounts payable that are invalid because when they paid it, it came through the bank feed and they just categorize it as an expense. In which case that bill needs to get deleted because it was already recorded. So we kind of go back and forth with the business owner on accounts payable, accounts receivable. Like I
So
was
those are two
mentioning,
big bucket categories that often require cleanup, is to be sure that
definitely.
payables are accurate and you don't have bills in there that have been sitting there for 2 years. The person may have died or
Yeah,
filed bankruptcy or gone, but they're still sitting there. And here's where, if you're cash basis, it doesn't matter as much. If you're accrual, it's
doesn't
you've
matter.
paid income tax on that income and have never
Yeah,
received the
never
money.
received payment. Yeah, in which case you should definitely write that off as bad debt, and that just goes
Right.
to your P&L as a bad debt expense then in the current year. So yeah, getting those cleaned up, and like I was mentioning earlier, like a lot of business owners think, well, I know what I owe, and I know who really owes me. That's not really the point here. Number one, you should be
No,
monitoring these reports, but these reports will skew your P&L if they're off.
that's right.
If your
Yeah.
balance sheet is not accurate, your P&L is not accurate. So it's not just to print out and be like, oh, these people owe me money. It's so that your P&L is accurate, so you're not overpaying taxes or getting in trouble in case of an audit, and you're actually getting the financial insights you need. So yeah, and then coming down to the equity section, accounts like owners' draws, are those all actually personal expenses? Fixed asset accounts, many times people have capitalized expenses that should not be capitalized, because the fixed asset account just had a name that looked like a P&L account name. Often they'll go with the standard chart of accounts from QuickBooks and they'll just throw it in there. Oh, computer expense, not knowing it's actually a computer fixed asset account, when they bought a new charger for the computer or whatever. So make sure that everything in the fixed asset accounts are actually should be capitalized. Make sure everything in the P&L that is over $2,500 that's a fixed asset gets recategorized to the balance sheet. Yeah, depreciation. I mean, I can't really go down every example, but yeah, there's some jargon there, for some of the things we work on.
Yeah, and I was gonna say, at this point, there are a small minority of people whose eyes are lighting up and their juices are flowing. And then there's another whole segment of the population, eyes just kind of glazing over, and they're starting to doze off and go to sleep.
Right,
Right. And it's actually those people who need some help.
right. They're the ones who need to stay on this call.
It desperately needs some help because it really matters. And I'll tell you, my biggest kind of crunch point came when the business I was running, due to some growth plans that we had, we needed to have uh, our entire bank deal redone, free up some cash for a growth strategy that we had. And so I went to a bank, right, to see if I could get an operating loan slash the new line of credit that would allow me more flexibility, seasonal flexibility, plus cash for new inventory for new stores. And they asked me some questions with the financials I had in my hands. And I was like, I don't know. That must be a good question. Let me go do more work. Okay. And I ended up talking to 7 banks over the course of about 4 months. And it was the biggest financial education I had in my life up to that point. Because if your financials aren't accurate and then aren't performing to good benchmarks, you're not bankable.
Right.
Okay, now you might say, well, my grandma will loan me some money. Okay, I'm telling you, you're still not bankable, and your grandma is foolish to loan you money.
Right.
You're not bankable. Okay, so your financials really are the benchmark by which somebody makes a wise or foolish decision in giving you money to grow your business, operate your business, or whatever's required. And to sidestep a good, healthy banking process, it might get you cash, but it probably won't solve your financial issues. So we've got to come back and be sure that our financials represent what's actually happening in the business. Inflows, outflows, equity, payables, receivables, what's actually happening in order to be healthy. So I'd like to let's just explore a little bit what you see drives people to get help? Why do they say, maybe I ought to find somebody else to help me do this?
Yeah, so there's often a couple of things. One thing is a lot of people just hate bookkeeping. They love their craft, they love operations, they love running a company, but they just hate bookkeeping. Maybe they're too busy, or they just don't understand what's going on. QuickBooks Online can be frustrating. And so they get on their computer after a long day of work, and the last thing they want to do is fight QuickBooks Online and get confused about what a balance sheet is versus a P&L, you know? And so, I mean, the way I look at it is like, this is how business works is people specialize in certain things. And as your business grows, it's actually not smart to try to do everything yourself. Like you need to find people who specialize in things that you don't do as well so that you can do what you're really good at. And so where we kind of come in is generally between 300,000 and 3 million in revenue. Because right at about 300,000 is where the bookkeeping becomes a bit more complicated. People are overwhelmed and just need some help. Right at 3 million is often where they need or where they get an in-house bookkeeper, which, like I said earlier, isn't always the best idea, but that does seem like it's the sweet spot. And so, yeah, generally it's a mixture of they don't enjoy it, they're falling behind, and it's just sort of this nagging thing in the back of their mind. Oh, I got to do that tonight, or I got to do that this weekend, and it just eventually they just don't get around to doing it, which is it's that procrastination loop that is just not good for anyone's mental health.
Yeah, and then as the business grows a little bit, they start having employees, and then they need to file sales taxes, especially if they have
Right.
some retail stuff. They need to do tax deposits, payroll tax deposits, business quarterly tax deposits. There are all these kind of routine activities that have to happen by deadlines, or
Mm-hmm.
the state or government issues penalties. And I've been surprised how many companies just live in the penalty zone their entire lives.
Right.
So how do you get a company cleaned up, or say a business owner finally gets to work and cleans up his financials? How does he stay on track? How do you
Yeah.
help businesses stay on track? What are the key kind of things that help a business become good at executing in that function of finance?
Yeah, so if someone brings us on board to help them out, there will be a lot of back and forth at the beginning just to get things cleaned up. So we need the business owner to care and to be responsive, especially for that initial cleanup season. Getting us access to online portals and that sort of thing, and all that communication happens in our client portal. And then as far as ongoing rhythm, really what we need is simply for them to scan in receipts, and if they want us to pay bills for them, scan in bills with that QuickBooks Online app. And that's really all they need to do on the expense side. Now, most of our clients, or really all of our clients, do their own invoicing. We don't really know how to invoice their customers for them. So they'll still create their own invoices in QuickBooks, and they'll still receive payment on those invoices. Other than that, it's just scanning in receipts, scanning in deposit slips. So we have a document where we lay out what is all the documentation we need from the client. And if the business owner is conscientious in scanning all that in, everything else is taken care of for them. Payroll, sales tax, bill pay, categorizing transactions, and then of course month end reconciliation, month end close, and then we'll send the report. So really give us the documentation and review your reports at the end of the month, so you can make good decisions. We try to get all the rest of the stress off of their table. Now, we do have some clients who do their own bookkeeping and just want us to come in once a month, reconcile the books, and audit their bookkeeping. And so that's another option we give for maybe a smaller business, someone who doesn't mind doing it themselves, but just wants to make sure the month end reports are always accurate. So yeah, that's an option as well.
Okay, and you raise an item here. Um, So you work with service-based companies. You have a few companies that probably are more in the manufacturing, where they have raw materials, they have labor costs, they have, a little more complexity in their financials. But getting an accurate financial report of activities for every month, getting it closed out so that it's accurate. For a business owner, that's really critical to know month by month how we're actually doing. I talk to a lot of business owners who don't really know how they did until they file their taxes. And it's often those same business owners who don't file on April the 15th, they file on October the 15th. So now they're almost another whole year of business activity without an accurate reporting of the activities and whether or not they've been profitable and to what measure. They can't make business decisions on pricing, on where they need to do cuts. They're not doing that month by month. They're doing it way behind the fact. So, what is a good month-end closing reporting kind of package look like?
Yeah, so there's this thing in accounting called the matching principle that says that all expenses should be reported in the same reporting period as the income that they help generate. So if you spend money on gas, that expense needs to be reported in the same month as the income that gas helped generate revenue. And this is really important for, like you were mentioning, manufacturing companies that have a lot of inventory. Because say you want to stock up on inventory, there's a good deal from a vendor 1 month, and you spend $100,000 in inventory, and usually you only make 130 or so K per month. Well, it's going to look like you lost a bunch of money that month, but really, hey, I was just stocking up, and so your P&L is not going to be accurate. It's going to maybe show, hey, you lost $30,000 or $40,000. So what needs to happen is there needs to be an inventory adjustment. And so what you do is you count inventory at the end of every month. And if there's more inventory at the end of this month, for example, and the reason for that is because you just stocked up a bunch, the difference in inventory at that inventory count, as opposed to the previous inventory count, gets adjusted in your cost of goods sold on your profit and loss. So say because you bought $100,000 of inventory, you have $60,000 more than you had the previous month. Well, your COGS is only going to report $40,000 if you do that adjustment, as opposed to $100,000, and then your P&L is going to be accurate. So there's some adjusting journal entries like that are also really important to get your month-end close correct. And then other than that, reconciling your bank accounts, your credit card accounts. Many times your loan account should be reconciled, unless it's just one simple payment and you split the principal and interest correctly. You did that. It's not as big a deal. Yeah, getting all the accounts reconciled, auditing the books for accuracy. That's really the only time you can generate those reports and have the confidence that they're not lying to you.
Yeah, and so the habits then around a good financial process, do you help people develop those and maintain those? So do you become a financial police for harebrained entrepreneurs?
Man, it's really hard just to get entrepreneurs to snap photos of receipts. So if they're doing the bare minimum for us, we're pretty happy. Obviously, we love the clients who are really engaged, who are asking questions about the reports. But yeah, I mean, in general, we always try to keep making their reports more meaningful. So if they're not doing inventory adjustments, we really push them like, hey, we understand it takes time to count that inventory, but your reports are going to be much better if you do this. Another thing is monthly depreciation journal entries. So many times people will just post their depreciation once a year. But if we can start getting monthly depreciation journal entries, and if we can work with the client on getting a real value sort of assessment of all of their fixed assets, all their vehicles and equipment, rather than just a tax value assessment, and then get a real value depreciation schedule rather than just a tax schedule. Because the accountants might depreciate that stuff faster just to maximize tax savings early.
Right.
Or you might be depreciating a piece of real estate that you know is actually gaining in value, which your balance sheet's not going to be accurate. Your P&L isn't accurate on a monthly basis if you don't have those monthly depreciation journal entries. So yeah, things like that where the client would never think about it. We do try to continue adding value and pushing them in those directions. Many times, the client's just really busy and has a hard time getting back to us, which we understand. And so our goal is not to always be pestering them as well. But for those who are engaged, definitely there's always something you can do to improve your reports, make your chart of accounts a little bit better. Yeah, for sure.
Yeah, and I've seen some of the reporting that you do, like for month-end reporting. Just describe us to a little bit that if one of your clients, a client that you have, you're doing their bookkeeping during the course of a month, what should they expect on the 15th of the following month?
Right. So we do have a deadline by the 15th of the following month is when we want your reports done at the latest. So some people will get them in the first week, others will get them in the second week. But yeah, so it's an email, and the bookkeeper generally tries to offer just some kind of high level observations in the body of the email. We describe what we did, and if there's any questions that we have, we'll put a link to the client portal where they can answer questions. And then we attach their management's reports package to the email. And so it starts with the profit and loss, the last 3 months. So your income minus your expenses, your net profit, obviously net profit, your most important number. And then your balance sheet as of the end of the previous month will be there. Your snapshot of your financial position. You'll have your statement of cash flows, which we've not talked about. We can get into that.
Right.
Many times business owners don't know where their money's going. They're like, I'm making money, but where's all my money going? And that's what the statement of cash flows will tell you, because there's stuff that's not going to show up on your P&L. Like maybe your accounts receivable is way higher than it was the previous month. So those invoices show up on your P&L, make it look like you made a bunch of money, but the reality is you haven't got paid for it yet. And so that's where your cash is going. Or maybe you're making large loan repayments. The principal for those loan repayments aren't going to show up on your P&L. Things like credit cards, if you paid down your credit card, you had a big balance on it last month, but not this month. That's going to be a source of cash. Or maybe you paid down some bills. So there's a lot of things that adjust your cash balance that won't show up on your P&L. And that's what your statement of cash flows is for. So you can know exactly where your money's going, why you have less money in the bank now than you had last month, even though it says you made $10,000. Well, it's because you got in a ton of debt. That's what that's for.
Yeah.
So yeah, and then just some other simple metrics like top customers by revenue, top vendors by spend. But yeah, those three reports are the big ones: P&L, balance sheet, and statement of cash flows.
Yeah, and those are the three critical pieces to really understand how money's moving through your business. Right. And a business requires all three. And a business leader needs to develop some level of mastery in understanding what they are. And I think in the reporting that I've seen you guys do for clients, it helps that there's a simple package with clear commentary, and it involves some perspective in that commentary. As a financial quote service here, we're telling you, here's some of the things we observe happening. And here is your P&L. This is how much money you made. Here's your balance sheet, the trajectories that you're on, and cash flow. Here's where your money's coming and going. So those are incredibly helpful. And I find that a lot of small businesses who do internal bookkeeping never have that moment of truth where they look at all of that, think through it, even if it's only for 15 minutes, right? But then use that clarity to make good decisions for the next month. They tend to pop in, and this is one of the stories I hear all the time. Oh, the boss ran a report and said, "What a fabulous month." and the bookkeeper says, "Oh, but I hadn't entered this, and I didn't enter this, and we didn't make this adjustment, we didn't," and then actually gets to the end, allows many leaders to extract themselves from the financial, run the company with a good reporting package that helps them to stay on track. So I think
Right.
that's a rhythm that I really like to see business leaders get into, rather than deep down in the weeds trying to manage based on action or on data that's not even accurate or clearly closed out.
Right.
So anything else you'd like to kind of say to business leaders, people, maybe even involved in bookkeeping? Any words of wisdom here as we wrap up our time together and open for questions?
Yeah, I mean, I would just say that if you want to grow a big company, now this is really important. Maybe you're just like a one-man show who's happy keeping your company small, and that's fine too. In that case, you still need to become compliant with the IRS. But if you're growing a big company, if you're making big fixed asset purchases, if you're working with a lot of inventory, like you really need to know what you're doing, or you could get into a serious bind. And so, yeah, I think it kind of depends on who the entrepreneur is, what their goals are. But I wouldn't, and I know I'm biased. I'm a bookkeeper, but you're not as biased, and you're agreeing with me. So I would just say this matters and
We'll
get it
we'll go
straight.
we'll go for that. Yeah, I'll take that. It's often not the first priority for a small business. We simply want to do the craft, offer the service, and grow our ability to do that. Okay, at some point, you need to start paying attention to your dashboards. Okay, and often stage one dashboards are clear financials. Once you're a larger company, you need additional dashboards. Rather than waiting for financials, you want weekly dashboards to really know how to run your company well, efficiently. But you have to start with clear financials. And without these clear financials, you're going to have way too much anxiety. Sometimes you have far too high levels of exhilaration. They're not rooted in reality. You think you're just wonderful because you got so much cash in the bank. Okay, and I've seen companies go bankrupt with very strong cash flow because they're losing money. It's just the losses get hidden in strong cash flow for a period of time until suddenly the moment of truth hits. And these three financial statements, your P&L, your balance sheet, and your cash flow statements, all three of them are absolutely essential to really getting transparency into your business. So it's worth taking the time to get it done well. And for myself, even, I just discovered, you know, bookkeeping is what, somewhere between a $15 and $30 an hour kind of job. Most business owners don't work for $30 an hour. They're $100 an hour, $150 an hour. And for them to step aside from doing that really value driving work to do bookkeeping work, they're actually stealing from somebody who would love to do that work for them. And it's time to, stop that, actually get a better product, a better service. And so I'm a big fan of handing off a bookkeeping, even in my small coaching practice, right? I have a bookkeeper, fractional,
Mhm.
and I get my financial reports on time, every time, buttoned up, tied down, and just gives you that kind of clarity that you really need. Okay, we'll just take a few moments. Rebecca, any questions you want to ask or that have showed up?
Well, yes, actually, I do have one coming from myself. So, I'm also an entrepreneur, and I'm feeling very called out by the receipts remark, have to say. um, but I
Victory lap.
guess having been one of the people and entrepreneurs who have gone through the struggle of trying to figure out like QuickBooks online, and also being somewhat of like a DIY person myself, are there any courses that you usually suggest to those type of business owners who are kind of in between where they don't want the full service, but they want to kind of do the bookkeeping themselves and do it right? Is there any kind of resource that you usually give them to learn about that?
Yeah, so YouTube. I don't know like offhand of a specific course, but there are a lot of tutorials on YouTube for QuickBooks in particular that you can get a lot of great info on. Um, I would say if you are figuring it out, doing it yourself, just make sure to reconcile the accounts. You know, that if the accounts are reconciled, you're going to weed out most major issues. And when I first started a lawn care business, I remember my bookkeeping friend being like, "Do you reconcile?" I was like, "I don't even know what that is." And so, I mean, I ran my first company for years without doing that. But if you start, especially while transaction volume is low, and you figure out how the reconcile tool works in QuickBooks, um, then when it gets more complicated, you'll kind of know what you're doing. So I would say just go on YouTube and search how to reconcile a QuickBooks Online account, and make sure your checking account and your credit card accounts are reconciled. It'll be probably a bit frustrating at first, and then when you figure out how the tool works, it'll be like, okay, I get what's happening. So yeah, that would be a first step I would give.
Awesome. Thank you. Yeah, YouTube is the best. Um, let's see. Waiting to see if anyone else has anything else here. But another question that I have is at the beginning, you had talked about um, the reconciling uh, issue between like people who were invoicing through QuickBooks Online and then not reconciling it. Are there any other little things like that that you've seen that is pretty easy to fix, but you just see all the time and people have no idea?
Yeah, so one would be fixed asset purchases and loans. So a fixed asset is anything that costs more than $2,500. This is kind of an oversimplification, but rule of thumb is if it's over $2,500 and it's going to serve your company for more than a year. So maybe you buy a vehicle or a piece of equipment or whatever it might be. That should not be expensed immediately. It should go to your balance sheet as a fixed asset. And also, if you get a loan for that piece of equipment, that loan needs to be recorded on your balance sheet. And then the loan repayments, the principal should go to your balance sheet and the interest should go to your profit and loss. So that any loan repayments need to be split between principal and interest. Often we see an expense account in the profit and loss called Dodge Ram loan repayment, and they're just posting the whole thing there. Definitely not how you're supposed to do that. And so, yeah, I think a pretty common one is when people buy a fixed asset or get a loan, not recording that properly. That happens pretty often.
And I just jump in here a bit. I think one of the challenges probably is sometimes people create their books just for tax reporting purposes, and that's quite different from creating your books for uh, business management purposes. In other words, market values versus tax basis. Some things you will actually, for tax purposes, maybe even take a Schedule 179 deduction where you'll deduct a whole bunch of assets much faster than they actually depreciate. So
Right.
there's a point of business at which you start having to break this out, where you run depreciation for tax purposes, for P&L purposes, you run them differently, um,
Right.
and and navigate those two. That's just a little complexity that probably should have
Yeah.
left out of this
And
conversation.
no, I mean, this is something I've been thinking a lot about in the last 6 months, just to get more nerdy. But yeah, your accountant has their own depreciation schedule. You don't need to keep track of that in QuickBooks. They'll keep track of that, or they should. And so your QuickBooks depreciation should be based on the real value loss of that asset every month, obviously
Correct.
estimated
Correct.
over the course of X number of years. That's what matters to your reports. The accountant can do whatever they want for tax purposes.
That's right. Okay, well, delighted to have you here with us again, Titus. And they can reach out to you at Titus at prosynergy.co. That's CO. And you'll find that information on the YouTube channel as well. We'll be sure that it's in the comments down below. But feel free to reach out to Shed Advisor. You can find us on Facebook, also on YouTube. Just search for The Doc by Steve Byler, or you can search Shed Advisor. You'll find all our past webinars there as well. Or you can call in at 228-591-9706 and just listen to it on your phone as well. Delighted to have you here. Our next webinar will be on Monday, February the 16th, and we'll be announcing that guest here in the next several weeks. So look forward to seeing you and hope you have a great year in your business in 2026. Thank you so much for joining us today.